The euro versus US dollar and the sterling versus US dollar looks just like the pattern that we saw yesterday. We saw a move to the downside and then a move back to the upside. In yesterday's trade, the price then rotated sharply to the downside. We'll see if that pattern continues today, but I'll talk about the technicals that are driving this currency pair in this video, so let's get started. At this time yesterday, we saw the price move lower and then back to the upside. And then we saw a rotation sharply to the downside. That took the price all the way down to a key target area down here in trading yesterday. That was the 38.2% retracement of the move up from the February low to the February high. That level comes in at 1.04065. Also near that level is this low price right from here. And that's where the low price stalled in trading yesterday. I can show it right there. You can see it right there. So that was around the 1.0400 level. But the rebound off of that level was short-lived and narrow in scope, I guess. And then it started to rotate to the downside and trading here today. What did we do? We fell lower, and we've had a similar pattern that we saw from yesterday. That is, the price moved lower and then we moved back to the upside, and that move to the downside came to our next key target area, or at least the high of the target area, defined by this 1.0371 to 1.0381 swing level. That swing level goes back in time to all the way over here where we had support, and then it became a resistance, and then became support, and then became a resistance before we had some difficult times through here, but then reestablished this level as a support right here, here. Traded above and below the level, but then fell sharply through here, and then reestablished a support through here and resistance through here. And you can see the pattern exists all through here. It's not perfect, but it defines a swing area where traders seem to be paying attention. Also near that area is the 50% retracement. And if the price were to move lower from here, by the way, would bounce back up to that old resistance or old support area right here between 1.04 and 1.0465. So this is going to be a key level right here. But if we do find willing sellers here, we're going to need to get below the 50% retracement and open the door for further downside. Alternatively, if we do see a rotation back above this level, we could see some short covering on disappointment of the break to the downside, so be aware of that. But right now we're at the key resistance level, and this is going to be key borderline, key level for both buyers and sellers at the 1.04065 area. Let's take a look at the dollar versus yen next. And in trading yesterday, while the euro versus US dollar and sterling versus US dollar were going up and down, we saw the dollar yen move to the upside. In trading here today, what did we do? We found we found resistance against the 200-hour moving average again. Couldn't get up to that level during the Asian session. We rotated back to the downside, breaking again below the 100-hour moving average, which should have been bearish, and it was, but we fell into this swing area down through here, which included the 50% midpoint. If I go to the 4-hour chart, you can see the importance of this swing area a little bit better. It goes up all the way back to these levels right through here. We had swing highs and swing lows through here. The last thing the market did was base against this level before moving to the upside. So hence why I outlined that level as a support. We fell below the levels right here. It should have gone lower, but then reestablished support here and then moved to the upside through here. So we're returning back to this area. And admittedly, we fell below it on 3 separate times. But today, what did we do? We found support against this area, which was key despite moving below the 50% retracement of this move up from the September low to the high price that we saw this year. That 50% comes in 149.22, and we started rotation back to the upside. So we're kind of trying to do what we did yesterday with a move back higher here in the dollar versus yen. We are seeing U.S. stocks move higher. We're seeing yields move lower. So it's a reversal of what we saw trading yesterday. But the price did find support against this key area right here. Did find support near the 50% retracement, sort of moved higher. So I got to give a nod to the buyers on the top side. Get above this high from last week. Would open the door for further upside potential toward this swing area and the 100 bar moving average on the 4-hour chart. Let's go back to the hourly chart, see if there's any other clues off of it. And if we take a look at the hourly chart, yep, we're back above the 200-hour moving average. That's this green line. in this chart. And notice here how the price is finding support against that level. Yesterday we couldn't get above the 200-hour moving average, so the ability to get above that level is a shift more to the upside here for this currency pair, as mentioned. Getting above the high price from last Friday's trade right here would open the door for further upside above the 150.73 level. Then we look toward this swing area up through here near 151, 20 to 33, followed by a 38.2% retracement, the broken 38.2% retracement. I got to put another Fibonacci on here from this high right here. The last swing move to the downside to this low right here. The 38.2 comes in at 150.93, and then the next next level up here comes at 50% retracement, and the broken 38.2% retracement. So keep those levels in mind. Finally, let's take a look at this sterling versus US dollar, and we'll look at the hourly chart once again, like we saw in yesterday's trade. Move to the downside, move up. We found support yesterday at the 100. We broke below that level, fell in trading, and stalled at the 38.2% retracement, the broken 38.2. That's how the move down from the September low to the September high. So we found support against that level, broke below that level, and now we're rebounding back toward that level, 1.26087. Going back to the hourly chart, this is you can see it more clearly, the importance of that level, especially over the last week of trading, where the price did find support earlier this week against that broken 38.2% retracement, and broke below it in trading here today. Now moving back up to it, so need to get above the 1.26087, and then we're going to have this cluster of moving averages defined by the 100-hour moving average, 200-hour moving average, and 100-day moving average, all converging together. That's going to be a key level, a key barometer for traders today. Get above that level, it's more bullish. Stay below it, it's more bearish, but that's assuming that we get above the 38.2% retracement. On the downside, we have support. Looks like right here against this swing level where we had a swing high, and then we based against it right here before moving to the upside. So that's going to be key at 124, 125.50. Get below that level, and it opens the door for further selling pressure. So there you have it, a look at three of the major currency pairs to kickstart your day. We do have PCE data coming out in the US. That's going to be key at 8:30, with the core PCE expected at 0.3%, and the headline CPE also at 0.3%. That should bring the year-on-year levels down, however. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.